Inflation, it's cooling off, or so the Fed wants us to think. We'll be discussing that, the latest going on in TradFi, crypto, and much more today on Money Never Sleeps. Welcome back, everybody. Do us a favor as we get going today. Hit that like button, subscribe to the channel. Nothing Kevin or I say is financial advice, so please do your own research before executing any buys or sells. Kev, we got some nice, cool inflation data. You know, 'tis the season. It's getting a little cool out, and so it's impacting that PCE number we got today. What were your thoughts when you first saw the data and when you dove into it a little bit more? And I know that you also have some data for, I believe, France and Germany that you want to discuss also.
Yeah, we got some pretty important inflation data, it seems like, from different parts of the world, obviously US and also Eurozone. But the American, the US PC data, I think it's pretty interesting. I think it kind of fits our base case here too. We've been talking about deflation being a possibility. I think a lot of more people are coming around to that. That's why we're also seeing, a lot of changes and shifts in foreign currency. But I'm not necessarily surprised. But the thing is here, that core is still pretty sticky. I will say that, right? So I think that there's a place right now where the Fed is in a place where they, okay, well, it's coming down, but at the same time, maybe it's not coming down as fast as we want. I think they're between a rock and a hard place. They can't raise rates, but they can't lower them either. They're going to have to keep them elevated. And this poses the biggest problem, which I think a lot of these banks have been preparing, since we've been talking about all this, this grasp for liquidity, is that there's a good chance we could start to see things collapse while rates stay elevated. So that's what I pulled from the US data.
Yeah, if we want to dive quickly into the numbers, we see that the headline PCE, no increase month over month, which is great. It's down to 3%, which, had been stuck at 3.4% for the September, August, and July readings. But if we're excluding food and energy, it's still at 0.2%, which is where it has been in 3 of the last 4 months, either 0.2 or higher. It's at the lowest level we've seen in quite a while. So that's great. It's moving in the right direction. This still makes things kind of, I think it pretty much locks in no rate hike for the December meeting and probably gives a little bit more credence to the idea that they're done hiking altogether. Now, that can obviously change, but overall, pretty good news here in the U.S. on the inflation front. Markets are responding well for the Dow, but everything else not doing too hot. Tech is getting beat up. Crypto is fairly flat, not a whole lot of movement there, but it's the Dow that is definitely leading the charge, up over 1% today.
Yeah, absolutely. And pulled up that right now. We take a look at the Dow, and then we'll take a look at some of the inflation data from other places in the world. And again, we're just going to look at their month over month or year over year. Nothing too crazy there, but if we look at the Dow today, it's up 1.03%. Like you were saying, it's 363 points up today. If looking at the Nasdaq and the S&P, it seems like it's an entirely different market. It's a face melter, and once again, we're creating gaps on the way up. We created 2 new gaps that I found, one from a few days back, and then one today. So I'm really interested in seeing how this plays out because we're in roughly a very sticky situation here with the Dow. Again, we're in this parallel channel to the upside. I deleted it so we can see some levels of resistance better. But yeah, here's the bottom line. Here's the top line. And we broke through this level of resistance here. However, we got the February 2022. This is the high from that month. We can see that that's kind of where we are right now. So we could get a double top considering we're 100 and 100 on the stochastic RSI overbought. Or if we want to be, big assholes, we could say that 36.5 is, potentially a new level that we could reach and, get a double top there. I think we are going to find resistance sooner than later. I mean, again, this doesn't seem sustainable when we get these massive moves to the upside. And again, I think a lot of this comes from the CTAs and a lot of these hedge funds that are chasing gains. Once they saw that the other 2 indexes were down today and this one started flying up, I think everyone started piling in. That's my base case for why it's going up. Can't guarantee that's the actual reason why. Again, I think there's a lot of people in this market that will tell you something, but it's probably wrong. And there's a lot of people who won't say anything about this market and they know exactly what's going on. And that's what I think we're seeing here. Just jump into the inflation data real quick, because it is pretty interesting to see how inflation globally is cooling. And I think this is posing another threat to just the global economy, that things are slowing down, right? So this is France. This is month over month. I can see that it kind of peaked at 6.28%, the inflation number back in February 2023. Since, I mean, that's what, 7, 8 months? No, about 9 months, my bad. 9 months or so later, here we are at 3.4%. So, I mean, it's cut it roughly in half. That's a really good move to the downside. However, that's a fast move to the downside too. So we have to keep in mind that maybe things are slowing a lot faster than we want to. I mean, if we look at Germany, Germany's an absolute dumpster fire, if you ask me right now. Not in a bad way, just it's not in a good position. If we look at this is the month over month. Did not want that one. I wanted Durham. Let's go. There we go. Year over year. You can see that it's coming down significantly, right? So it looks like earlier in the year we were at 8.69%. We're currently sitting at 3.2%. That's a huge contraction. And that we were talking about manufacturing being the biggest leader of that. Manufacturing contracted hard in the Eurozone, specifically in Germany. Now we're seeing unemployment start to rise in the services sector. It's no different than what's happening in France, and it's no different what's going to happen to the United States eventually. But we see how fast it's cooling. Now the question is, prices are, the rate of which prices are going up is decreasing significantly. It doesn't necessarily mean that there's demand to buy it, because if people know that the price is going down, they're likely to hold off until they can get a better deal with it. And that in turn just creates a bigger problem than people are anticipating. So I think that if we look to Eurozone and what's happening there, and if we even look at, some of the other things that are happening in Forex right now, like, oh man, I got to switch this chart real quick. Where are we? Where are we? Candles, there we are. Yeah, with the euro right now, it's absolutely insane what we're seeing. The euro is in a really kind of weird place, because it pumped all the way up into this parallel channel, right? But we're getting inflation data coming that it's cooling, and we know that there's a lot of debt over in Europe. Now it's coming out of this. So it's breaking out of this bear flag, out of this other bear flag that it kind of rallied into. And now we have to question, is this the beginning of a five-way move to the downside? And this is the wave 2. Now we're waiting for wave 3, which would be a big one. And the question is now, does that make the argument that the US dollar is going to take off from here? So it's really interesting seeing all this inflation data globally and how it affects the US dollar, how it's affecting markets, because we know if their dollar falls over there, our dollar is going to go up, and that's probably going to hurt the equity market here in the United States. So it's just a kind of a game of playing, catch and seeing where the money is going to be flowing from one market to the next.
All right. We also saw a little bit of data, with the personal spending starting to see it. Who would have thought? Disposable income drying up a little bit. Couldn't have seen that coming. I also want to bring our attention to a survey and some stuff that you and I were talking about with Mr. House in our group chat. And this was around, according to TD Bank, 96% of U.S. shoppers have said they expect to overspend this season. I'm happy to be in the 4% that is not doing that. And Kevin, I don't get it. I don't get why people know that they're spending more than they can afford, but they're just doing it anyway. It doesn't make a damn bit of sense.
They're savages, man. Absolute savage degens. They missed the 2021 NFT bull market. That's all that people want to go into. They want to ape into everything, even if it puts them into massive amounts of debt. It's just wild, man. I think people. I mean, I think it's one of the most simple economic lessons that we got in school. It's like, what's a want and what's a need? Just buy the fucking needs for right now, right? Save cash. I mean, not to be an asshole, I'm going to pull this up right now. We're just talking about Forex, but has anyone keeping an eye on the dollar? Dollar's kicking ass right now. It bounced off that bottom parallel channel, and it looks like we're seeing a huge move to the upside today. We're up almost, how nice, 0.69%. Awesome. But look at this right here. I mean, you got a huge rejection off this, and it just shot straight up. And if we look at the stochastic RSI, it looks like it's been compressed for a period of time, right? So I think people are really underestimating the dollar, because it's down considerably from where it was back in October, but the stock market shot up in October. It wasn't going in the upwards direction in October until, the CTAs absolutely switched, and they started buying this market. So people are underestimating the dollar. They were spending it. They don't understand that there's a huge liquidity crunch right now, and that they're going to want to be holding US dollars eventually. So I'm really not surprised that people are making that mistake. But again, that just is going to lead into the consumer not being able to pay any of their bills. Delinquencies are going to rise. Credit card debt's going to continue to rise. And what happens when some of this debt is, you have to start paying it off? Well, the money's not going to be there. People are going to be strapped. These companies are going to get screwed over. I mean, even like we haven't even talked about this, but student loans, those are in full effect right now. It's just there's not a lot of money that's flowing out there for the consumers. So every time they overspend, not a good place for them.
Yeah, man, it's gonna
Sad.
the chickens are gonna come home to roost, and it's gonna be a lot of chicken shit all over the place. What else did you want to look at? It's the monthly close as well, last day of November. When we look at the charts, let's do a little. I kind of want to look at the either TradFi or crypto charts and kind of get a feel for where we think things could be heading in December as we close out the year.
Down. I'm just kidding. Maybe we really have to. It really depends on what happens after the buyback window close, right? I think that's our base case for the time being. But if we look at this monthly, we shot up amazing in the S&P this month, 8.42%, almost erased all the losses that we had for 3 months in a row to the downside, right? However, if you look at the stochastic RSI, once this closes and the market opens tomorrow morning, we'll get an idea of where this is. We could be right back in the overbought territory. I mean, this is a massive move. I mean, I wouldn't be surprised if the RSI puts us back into like high 80s, mid to high 80s for these two numbers. Right now we're at 66 and 78. That would be my base case for thinking that we could be pushing back up into this parallel channel. But the question is, we're back in this parallel channel. We're finding resistance. We weren't able to get the monthly close above this level, this white trend line. So that tells me that we're finding this as resistance, overbought, and a lot of people are positioned to go long here. A lot of people are getting bullish right at the top. I don't know. I think that's a dangerous place for the S&P. I think we're going to want to keep an eye on that. Again, if we were looking at the VIX too, VIX has been interesting. It's been going up and down. I don't necessarily think that the VIX is done yet. I think that there is a good chance we could consolidate here, maybe go down a little bit more, but we'll have to keep an eye on that. S&P is going to be the answer to that. Whether they want to keep crushing the VIX and keep the S&P afloat further, or if they want to just make these small little gains and see what happens. But that was the S&P. If we look at the NASDAQ, we went right to the trend line, got rejected from it. This is a trend line that we talked about for a period of time. He said, maybe we put in a lower high here. And yeah, this bull flag absolutely worked out, shot up. We were talking about how this was just going in lower lows and lower highs. Eventually that would break out. It did. It just broke out more than I think anyone was anticipating. We're up 10% on the month on the NASDAQ. And if we look at this from down here to where it all the way went up to, it was 12.04% that it shot up. So a really massive move for the NASDAQ. Had a great month. But again, 81 and 87 on the stochastic RSI for the monthly. It's not a great place. Now the monthly's overbought. We look at the weekly. The weekly will be extremely overbought come Friday or Monday open once we get the new week start. And if we look at the daily, we're coming down a little bit, but we haven't filled any of these gaps yet. And we got some pretty big gaps here. This one's a massive one. So I do think this one probably will get filled out when we go into December. I'm satisfied with this bull flag, this bull flag right here and the pull and then, shoot up out of it. I think this satisfies, a good move to the upside. I think we are starting to see, some of the anticipation and excitement die down. And if they're playing chase after a 5% drop or a 5-point drop in some of these markets just to buy it right back up, that's why we're seeing kind of this consolidation here at the top around resistance. Once that demand for people buying this market back dies out, good chance that we're going to start seeing them chase the market in the opposite direction, meaning maybe going down if that's where people are starting to move some of their money, especially at the end of the year, tax harvesting and all that stuff. So very interesting there. Let's look at the last one.
Listen, you know how much I love our little video drops. So I'm just going to toss it out there. If we happen to have something where every time you talk about a gap being filled, it took like the old, like early 2000s Gap clothing store commercials, the fall into the gap. And we had something along those lines for the charts. I would be okay with that. Just throwing it out there.
You're going to be disappointed with me. I have no idea what you're talking about. That might be before my time.
Dude, God, you weren't even born for when that was a thing. I'm feeling old. Go look up fall into it was how the Gap used to do like commercials and stuff. Like, oh my God, I am ancient. Jesus Christ. All right, just keep going.
I'm a 90s kid, but I just late 90s. Yeah. So yeah, that's what I'm seeing with the Dow. Obviously we have to find where this resistance lies, because if we look at this on the monthly, it's 100 and 100. It could not get more overbought on the daily. If we look at the monthly for this, we're actually Dow on the monthly kind of pulled back a bit. It's roughly came out of the overbought. It could go back into the overbought territory, but based on this monthly candle, I mean, this is a massive monthly candle, absolutely destroyed the 3 months of losses that we had, right? So we have to fill these gaps. We have to start from the top down. I don't necessarily think that it's going to happen in one day. We could see something bad happen. I retweeted about a month ago that it's very possible we could see a day where there's a 1,700 point drop in the Dow just out of nowhere. People aren't anticipating it. I think it's still very possible. I think with the VIX being as low as it is, we could get a Volmageddon situation where just so much volume comes in, from these machines, and it's just selling pressure. It just spirals out of control to the point where we see something dangerous to like February of 2018, I believe, where the Dow was down significantly. Let's actually look at that real quick. February, let's go to the weekly, and let's go to February 2018, I believe it was. Am I tweaking? No, there it is. I see it. There it is. Maybe I don't know where I'm talking. No, I don't know what I'm talking about. I don't know where it is. I lost it. But no, it wasn't COVID. I think it was in 2018. Whatever. I'll find it. We'll talk about it tomorrow. But let's put it this way. It was a significant drop in the market. Absolutely crazy. See, I when I erase lines, I lose everything. And I can't remember the date right off the top of my head. But I think it was in February.
Order, there's chaos. And that definitely applies to your charts.
Absolute chaos in my charts. Yes. I tried to clean them up and it ended up biting me in the ass.
I think it's kind of the other way around, though. The chaos creates the order on your charts.
Maybe. I don't know, man. It's all chaos. These markets are going to shit. But that's pretty much what I'm saying with the major indexes, right? I think we're finding resistance. I think December 8th is going to be the day where we start to see things kind of shift. We got unemployment coming out. We also got the stock buyback window closing. That's so key to this market right now because there is so much money on, there's a lot of money out there still on the sidelines, and they kind of pumped it into this market, and a lot of these companies are buying back their stock. But once that window closes, I mean, they don't have much options. I mean, sell, right? So it's going to be really interesting to see how that plays out, but we need that window to close so we can account for less buying in the market, and that's probably going to give us a good indication of what we're anticipating going into next year. Now, going into next year, before I get into the bank stocks, I want to show you this. This is banks' unrealized losses and their unrealized gains in Q3 of this year. And if we're looking on this chart, this is from Axios, we could see that the dark green is held to maturity securities. And then this light green is available, that's things that they can sell right now. So securities that they can sell. But if we look at this right here, it looks like we grew significantly. The amount of unrealized losses that the banks kind of collected in Q3 were somewhere south of 600 billion. So that puts us around 650 billion or so in unrealized losses. And if we look at the amount of gains, roughly, I mean, they're not positive in this regard. So it looks like there's a lot of pain in the banks right now. I'd be very concerned about them. I think this is also why we're seeing a lot of those reverse repos being drained because they need liquidity. And we were saying that February, March, there's a good chance that it could start to drain by that point. And then there's just no cash in the system. We might get a dollar shock to the system, but this is not a good sign. And the interesting thing about this is you see this data that came out yesterday, and what it started rallying like crazy yesterday, the banks. So it's really funny to see that the ones that are in the most amount of pain are the ones that are actually rallying here. And if we look at this on the monthly close, let's pick up Bank of America, right? I mean, it's above this trend line. I think that there's a good chance that it could close below it by the end of the day today. It's completely overbought. It's 185. And if we look at this, just what I see from this, just on a quick chart, three-way move up, it's a massive five-way move down. I mean, if it starts with 5, it's got to end in 5. So even if it's just an ABC correction, it's got to be 5 waves down, 3 waves up, 5 waves down. I mean, 5 waves down could take us pretty deep if that's the case, especially if these losses have to get realized at some point, or they realize, hey, we need cash, we need to dump these assets because they suck. There's something that we need to be keeping in mind going into 2024, into December, because I think a lot of positioning is going to happen in December. Schwab makes no sense why it's shooting up like crazy, but once again, perfect ABC correction after a 5-way move down. Let's see, PNC, they're all putting in the same exact pattern. That's not, suspicious. That's kind of correlation in my opinion. I think that there is something to that. And a lot of that does have to come with, how poorly exposed the banks are to terrible assets that are just bleeding out cash for them. So that's something that we need to keep in mind going into December. I think the banks are going to be a huge play if we keep that in mind. And let's just look at one other thing before we go into crypto real quick, because there's nothing going on there. We talked about the euro.
pretty quickly.
Yeah, it's nothing. The yen. We're talking about the yen. It's like, oh yeah, the carry trade, it's going to happen. I think the Bank of Japan is screwed in this position. And this goes back to China as well. China is printing cash like crazy, and people are thinking that money is going to flow into the system. No, that's inflationary. That means that their dollar is going to get devalued. The US dollar is going to grow stronger against it. And that's just going to kill things, especially if they're trying to pay off debt. That means that it's going to take more yuan or more yen in order to pay off that debt. The US dollar is going to remain stable, if not grow in comparison to the two. So if we look at this chart for the USD and JPY, it looks terrible. It looks like it's going to break down. But if we flip it, JPY to the US dollar, I mean, things that trend up in a bear market probably are going to keep trending up, and things that trend down in a bear market are probably going to keep trending down. And this thing looks like it's just trending down. The yen is absolutely just bleeding to the US dollar and has been. Oh, I'm not even showing the right chart. What an idiot. What an idiot I am, dude. What am I looking at right here? I got too many tabs. Am I looking at gold? No. PNC. There it is. Dude, I am so stupid. I'm off of it today. Let's go here.
It's one of those days.
Just one of those days. Who was that? Fred Durst?
Just one of those days when you don't want to wake up. It's a great song.
Chop someone's head with a chainsaw or something like that. Yeah, it's a great song.
I saw Limp Bizkit in concert. I think this may have been back before you were born.
In Florida?
No, man. Back in St. Louis. This was back in like 2003, 2004. Way back in the day.
Was there? Was that the one with Linkin Park and everyone that was there too?
No, it was Exhibit, Papa Roach, Limp Bizkit, and Eminem.
Oh my goodness, that's a
show.
That's a great show.
Early 2000s. I mean, you just can't get any better than that.
I would die to go to that show. JPY US dollar. Let me go back to what I was saying before I was stupid and didn't show the chart on the screen. Things in a bear market, if they're trending down, they're probably going to continue trending down. And look at this. This is the Japanese dollar to the US dollar. It looks like crap, right? And if we look at this, on the flip side with the US dollar, the JPY, completely different story, right? So we have to question, is it more than just technicals at this point? And I think it is. I think it really does come down to debt and dollar reserve currency. I've been extremely bullish in the dollar this entire week. I entered positions. And as of right now, it's doing pretty well comparative to a lot of the other currencies. JPY keeps depegging. It keeps going crazy in both directions. I think that's hurting the economy even worse. And then the yuan, again, they're printing trillions of dollars in the yuan, and that's not a good thing for them. And again, they have unsecured, no collateral loans that they're having the banks issue. That's just creating more issues for the banks at that point. So I'm really a firm believer that things right now are not as they seem. And even if we look at gold, remember I said that gold is a very scary trade right now. I mean, this is an ABC correction in my opinion. I think this is going to trend down right after we get some type of shock in 2024. But on the monthly close for everything, I think everything is kind of the perfect scenario for people to believe that it's going to continue going up. I disagree. I think there's tons of signs out there. The bond market is just absolutely one thing that we have to be keeping an eye on, because that too is showing you that people are trying to get into anything that has exposure to cash. And I don't necessarily think that a lot of these assets that pumped 8, 10%, 12% this month are going to hold up moving forward. And last thing before we get into anything crypto, Tesla on the monthly close, right? Went up to the top of this channel. We got rejected from it. We're overbought on the monthly still. I think we're going to go further to the overbought. But if we look at this on the daily, we're absolutely plateauing here, guys. So in my opinion, I think Tesla's next target is probably going to be the bottom of this trend line. So that puts us, sub 180 for Tesla. We could, potentially see, 176, somewhere around this trend line if this plays out. Eventually, either it breaks out or it breaks down. That'll be the question once we get down to these levels. So I think that, CyberTruck, all the shipping and deliveries today, awesome, but doesn't mean that it's going to break out and go to the moon if people aren't buying, especially if those earnings next quarter are crap. So keep an eye on that.
All right. We can just move quickly through crypto. It's boring. We're going to end the month in the green. So it'll be 3 straight winning months for the crypto market, at least for the majors, which, which is great. It's going to be still overbought. It's going to stay that way for a while. And, we got the halving, so we're all going to be driving Lamborghini soon.
Fuck the halving, man. I say that in the kindest way possible. No, yeah, it's really interesting seeing Bitcoin being up once again. And if we look at this monthly close, it's going to be pretty It's pretty green. We're up 8.86% previous month, 28.74%. How much of that is Tether? Probably all of it. But regardless, when we look at this here, we can see that this kind of is putting in a massive, ABC correction, right? From all the way from January 2023, we rallied all the way up to April. We had our, our B wave bottom somewhere in August. That was probably the Evergrande dump that saw that go all the way down there. And now here we are all the way in, November going into December, and we're at 37, almost 38K. I mean, that's a pretty good move to the upside. And if we anticipate, 5 waves that we had down here on this side, you can say, wave 1, wave 2, wave 3, wave 4, wave 5 down here, FTX, 3 waves up. Let's say 5 more waves down. So that could put us 1, 2, 3, 4, 5, something like that. And, this could play out by, I don't know, maybe August, September of next year, if that were the case. But again, we have to see where demand lies, and we're seeing a lot of demand slowly shrink globally. I wouldn't be surprised if people try to pull out of Bitcoin like people will probably try to pull out of gold. But again, we have to see how things play out. We also know that there are a lot of threats that are currently out there to the crypto industry. I do want to show 2 things real quick. USDD, which is a Tron stablecoin. We're going to look at this compared to the USDC. We get this out of the monthly. Let's go to the daily. All right. Why is this acting all weird here? Why is this here? Reset price scale. No, this is weird here. Let's see. USDC. Let's try this. Okay, I don't know what's going on with this chart. This is like wacky shit right there. So never mind. Let's not look at that. But pretty much what I'm saying is USDD has depegged. It's at 96 cents to one coin, one USDC. So that value is down, and also TUSD is below the 99 cent peg. So it's at 98 cents. These are both Tron stablecoins. These are ones that we were talking about, when it came to the USDC market and USDT. And we know that if those are depegging, there is probably liquidity issues in the market. Those are both Justin Sun's. He has exposure to both of those since they're on his blockchain. That is definitely a sign that something is probably going to be happening. Either they're pulling money out of somewhere. We've seen so many hacks with the Tron blockchain recently and his exchanges. It shows you that there's still a lot of manipulation out there in this market. So I think that Bitcoin being this frothy going into the new year, it's something that we should keep an eye on. Other than that, in crypto, we know that Michael Saylor just bought a shit ton more of Bitcoin. Is that good? I don't know. He's usually a top guy, if you ask me. I feel like he has the worst DCA strategy into Bitcoin. He waits for it to bottom, and then he waits for it to pump before he puts in, $500 million into it. So take that as a grain of salt. But I think that, maybe he's accumulating, but it doesn't necessarily mean that smart money is accumulating in that situation. As for the rest of crypto, if we look at just the total market cap, we're roughly sitting at 1.39 trillion. Again, we're still in this massive parallel channel. So could we push up a little bit higher and get rejected here at like 1.49? Yeah, it's very possible, right? Especially if we look at how oversold it is on the daily. It'd be a nice, good pump, but I think that would be the last pump we see. If we look at this on the monthly, this thing is extremely overbought, right? We're at 87 and 82. With another 10% move to the upside this month, there's a good chance that we're probably going to be topping out fairly soon, in my opinion, especially with volumes dropping as the price pushing up. We should be, eyeing origin level if we want to expect something in 2024 where this could potentially bottom, where we find some support. But all of crypto seems a bit too euphoric for the volumes that are out there and for the amount of liquidity that I think all markets are going to be struggling to find going into December, January, and Q1, Q2 of next year. So that's pretty much just my take on the monthly close and where we're standing. I think we're extremely euphoric and extremely greedy at this point, but I always say that too. So
all right, good deal. That is going to wrap it up for today's show. Appreciate everybody for joining us. If you have not yet, hit that like button, subscribe to the channel, drop a comment. You know the drill there. Thank you very much for joining us. We'll be back tomorrow to close out a fun week in the markets, begin December, the final home stretch of 2023. Once again, have a great day. Stay safe out there, and we'll see you tomorrow.
Take care, everyone.